During the domestic direction program, the argument was that for some people, it was maybe the end of some of the banks when it comes to those strong profits, revenue growth, and strong growth in asset. But what has been the case for some of the local banks post this domestic direction program? Well, it appears that there is one that is still standing strong. The numbers are solid. The growth are quite interesting. But again, how does this bank sustain these numbers in the midst of all these challenges? But now that the economy is doing so well, can you say that they are on that path to some solid growth in financials and actually maintaining the stand as one of the strongest banks in this country? What about their role in the economy as well? Yes, that is GCB Bank. On PM Express Business Edition, we assess the role of one of these strongest indigenous banks and their contribution to the economy. And also, post-domestic direction program, are the numbers indeed saying that the bank is now out of the woods, or indeed there is more to be done? On PM Express Business Edition, I'm looking at the GCB Bank and its role in the broader national economy, and whether the numbers indeed confirm that it's a test case for how strong the bank is now, post this domestic direction program. Engaging the newly appointed, or not newly appointed actually, the Managing Director of GCB Bank, Farihan Alhassan. Thank you, sir, and I appreciate your time so much for having us time to engage us on PM Express. Now, I mean, how are you doing? Let me just start with you first about how are you doing? Or let me just start from first, what did you make of your appointment, moving from a private multinational to, let's just say, a state private bank, if I can use that expression of GCB and all the rest. I just want to find out from you first, what do you make of your appointment as the new MD of this bank?
No, thank you very much, George. It's a pleasure to be here. Thanks for having me. So that's a very good question. I get that question asked every now and then. How do you feel about the movement from a multinational into a GCB Bank? Having worked in Barclays for so many years and in Standard Bank, so my career has been within the multinationals. Look, the reality is that it's been quite an interesting journey, an interesting transition, considering the fact that in the multinational space, things are done differently. But it comes with a lot of advantages as well. In the multinational space, you are executing a strategy from the head office. In the local bank space, or in the GCB space, you actually own the strategy. And the strategies that are coming from the multinationals may not necessarily address Ghana's economic priorities. As a bank like GCB, who are the leading bank in Ghana, you want to be seen to be playing in the real sector. And so when that farmer approaches you for a facility, when that woman in Makwala comes to you and needs some support, when that manufacturer needs to put up an industry, you don't need to make a case at the headquarters. You need to make that decision in Ghana. It comes with some fulfillment that you are actually supporting the real sector. You are advancing Ghana's economy in a very timely, agile manner.
Mr. Alhassan, I just also want to find out from you, how has the people in GCB welcoming or interesting for you? Because there's always a perception about moving into, again, I hope I get my expression right, a state kind of private institution, and where you are coming from a place where, you know, things could be very, very fast. Maybe here there could be some bureaucracy. How has the transition been for you personally, moving here? People been welcoming, encouraging, challenging, or the bar has already been set for you? So listen, there is no time to waste.
I found my transition here quite seamless. In all honesty, I was coming with a lot of trepidation because of the reputation about GCB out there. But I already found a very welcoming set of employees who are eager to advance the cause of this bank. They are very passionate about the brand, and for far too long they've been waiting for a clear direction to actually show to the whole world who they are. And I tell them this all the time, not to placate them, but this is probably the best crop of employees I've worked with in the last 22 years. The sense of ownership, the sense of responsibility, the willingness to be the best is second to none. And so they embraced me full-heartedly when I walked in, and the support has been phenomenal. The 2025 results is a reflection of that commitment to supporting the 2028 plan of the bank. It's a collective effort. Everyone is running around it. And sometimes you just really, really wonder, what have they been doing? They own the strategy, and they're running around with it to be the best in the industry.
Would it be seen as one of your priorities that now that you have tasted the pudding and it's quite sweet, what are you doing to tell the story to the potential customers out there and the public people out there that see, this is a great bank, this is a bank that you can do business with, this is a bank that they are there for you because you have tasted it coming from a private multinational. Things are different. Do you see this as a priority that, listen, we have to do a lot to work on this perception as a bank? It's not just about the numbers.
So I rather find that our employees are very loyal to the brand. And that's one of the things that excited me when I took up this job, that you see clients who've been in this bank for 50 years, for 60 years, and they're still banking with GCB. They trust the brand. They just want to see us do things differently. And I think that the renewed energy, the verve, the power that we're seeing in the employees is beginning to really rattle feathers out there. And customers are beginning to ask, what's the new thing happening within GCB? Our staff are a bit more excited about engaging customers today. We are building capacity within the employee network to just ensure that when they're engaging customers, they know what they're engaging them on. We'll build capacity in different sectors of the economy, whether in mining, in agriculture, in manufacturing. We've got experts working in the bank today who can actually have value-added conversation with our customers. So in terms, to answer your question, I think the trust is already there. We are in about 184 different locations in the country. We've got about 333 ATMs. No bank has that. And so already there's that trust that this is our bank. We need to work with them. Perhaps what they've not seen in the past is the level of activity they are beginning to see now.
And I asked that question because sometimes the bank is seen as a state bank, even though it is listed on the Ghana Stock Exchange. And there's some who think that, oh, things that I had to do with the state, I don't want to do business with. But I see you as a whole group in several areas. And that's why I'm asking about the bit about the perception, and is that a focus for you that, listen, we are a very strong bank, we need to let people out there know what we stand for as a bank?
Yes, so which leads into the comments I made earlier on. It just depends on what new things are we doing, how are we doing things differently. And so customers are asking, what's the new thing happening in GCB? We are now a bit more visible than we were before. The quality of conversations our customers are having with us are quite different today. We are building capacity in different sectors to ensure we are having value-added conversations with our customers. And so yes, we would want to position ourselves as that bank that can do things like any other multinational. But hey, the advantage we have again is that already there's that trust. We just need to lift it to a different level.
I mean, what is the plan for the bank going forward? I mean, there's a strategy you've taken over. What is that strategy? I knew you had a 5-year or something that had to transform the bank into a different focus. How far have you come with that plan, and how is that shaping up?
So we built our 4 or 5-year strategy around 3 key thematic areas: around our customer experience, around digital transformation, and obviously around our people. Strategy starts with people, and throughout my leadership, it has always been around people first. So what we've been doing over the past 1 year is just to see how we repurpose our people to acquire the skills that we need to execute on this 2028 strategy. The 2025 performance validates that we're doing the right things. Yes, we are the most profitable bank in the country, but that's not what really excites me. What excites me is the pace at which we have done this. If you asked me last year, do I really genuinely expect us to be the most profitable bank in 2025, I would have said no. Do I really expect us to be the most profitable at a point in time? Yes. Our strategy was very clear but they didn't really expect us to do this in 1 year. So clearly, the teams are executing at a much faster pace than I would have expected them to execute. Customer experience is very key. We are positioned as a key strategic pillar as well, because for us, it's not just the experience, it's strategic, to the extent that your inability to serve your customers very well could erode confidence that they have in your brand. And your ability to deliver solutions for them at the right time would win their trust. It would make it easier for you to win new customers. And so for us, we are positioning customer service as a strategic pillar. The feedback we've gotten over the past 1 year is that we are making modest progress. And this feedback is from the same customers, but there's still a lot of room for improvement. Digital transformation, I wouldn't say much. We are trying to put power in the hands of the customer. And for us, again, digital transformation is not just about deploying technology. It's about ensuring that customers find it easier to interact with the organization. It also fits into the customer service thematic pillar that I spoke about earlier. So today we are a bank where customers can actually go onto our app, and in 26 seconds, they can have a loan approved for them. Not minutes, 26 seconds. They can have a salary advance in 26 seconds. So under 26 seconds, they can actually go onto our website and open a fully KYC account under 30 minutes. They can actually go onto our website and apply for a new loan under 45 minutes. So these are all innovations we are bringing on board to make things a bit more easier.
Fine, I'll come much more to the bit about the loan, because it appears that you're doing something interesting in that space. But let me come to one of the focus areas, the debt exchange program. And we all thought that it could take a long time for the banks to come out of it. I do an industry scan last year, 2024, and the numbers that the banks are posted, and the numbers that GCB is posted. And I asked myself that, were we all exaggerating when we thought that the banks could take a long time to come out? I mean, a profit before tax of almost more than 3 billion. That is huge. What have the banks been doing? What has GCB done that has made you move so fast in terms of these earnings and profits?
So again, I don't think we are out of the woods yet, if you ask me as an individual. I think that there are some pockets of concerns that we need to be careful about. Yes, we have rebounded back quicker than we all thought. As an industry player, we all thought this was going to take us some 6 to 10 years to recover. But it just speaks to the resilience of the Ghanaian economy. It talks to the level of support that the central bank has given to the banks. The shareholders have been very, very involved in how the banks have recovered. And so for me, then again, I think the recovery speaks to some of the clever things that the banks have done over the past, especially the local banks. I mean, the local banks don't have any parent companies who would have capitalized them. So they needed to actually bite the bullet themselves. There were some local banks who didn't pay salaries for a number of years just to make sure they took the bullet to survive into the future. And those were accepted by the employees of those local banks. For the multinationals, it was easy for them to actually pick a phone call and call their parent out there and say we needed more capital. Shareholders were also very, very instrumental. They stood behind their companies and ensured that banks that needed some bit of capital injection were giving those capital injections. Central Bank gave us some reliefs. Some of those reliefs actually ended last year. And I think all those events sustained confidence in the economy, sustained confidence in the banking industry, and the results we are seeing today is a reflection of those issues I've just outlined.
And for you, do you think that the growth would be, or the expansion that we are seeing from the banks could be faster than what we initially thought? Because all these things you're telling me played a critical role. Now we've seen the numbers, we've seen the growth in assets, you've seen, and I'll come back to the NPLs and the case of GCB and what you've done, and the quality of asset, return on investment and all those things. And we're looking at the numbers and they are looking quite interesting for those who have published their financials.
Look, the economy has improved significantly. And right from last year, both the finance minister and the central bank governor didn't hide their intent in reducing interest rates. And with where the economy is heading towards, banks can only do better. NPLs certainly will have to come down because customers who would have borrowed in the past and could not pay will now be able to pay because rates are going to come, or rates are actually coming down. Banks will now have to lend into the real sector because government instruments are not trading at very, very low rates. So you can only get better, is all I'm saying. Yes, you might not be getting the interest income you're getting in the past, but it will compel you to begin to think about other clever ways of solutioning for the customers. NPLs will certainly come down, which is one of the biggest concerns that this industry has been battling with over the past 6 to 7 years.
I mean, per the brief, Mr. Farihan, that you were given when you came in, what are some of the tough measures that GCB had to take in that recovery process from managing the suited shocks of the domestic debt exchange program that the bank has been able to do to undertake to bring you these levels? For those who want to say that you just look at the bottom line looks quite good. What are some of the briefs that you picked up from the bank that, or some of the things that is still in continuum that has seen the bank remain this strong and resilient in the midst of all these challenges?
In fairness, and with the utmost level of respect to the employees, they did marvelously well in probably taking the bittest pills earlier on. The NPL coverage for their loans were over 90%, which for me was a big surprise. I mean, in a local bank, you'd have expected that it was going to be lower. So if you ask me, I think the foundation was very clear from the beginning. The very difficult decisions were taken earlier on. The bitter pills were swallowed. And so what I came in to do was just to build on the foundations that they had built in earlier. So there wasn't really so much to do than to just say, let's get it going, let's relook at the strategy, let's refocus, and let's take this direction. And like I said earlier on, they were just looking for that direction, and they think they had it. And the 2025 performance validates that we're on the right trajectory.
It's been 1 year so far. I stand to be corrected. I mean, have you already started plugging in some of the experience and then the nuggets that you were exposed in the other multinational banks to growing this local indigenous bank?
That's what influences our strategy. Like I said, I'm used to working a particular way. So today, we have our underwriting, we have a different wing underwriting our loans, just to be sure that we are taking the right decisions regarding credit risk. We are playing very seriously in sectors that we probably wouldn't have played in the past. We're playing aggressive in the mining space, for example. We are positioning our bank as a bank that can support even primary agriculture. We are building capacity in the energy space. So we are doing things that would make us look like a local multinational player. So that anything that those multinationals can do, we too should be able to do those things. So in terms of bringing my experience from the multinational, I think we're beginning to see that in GCB. And frankly, people are excited about the new things that we're doing.
You talk about multinational. I know you can challenge them with your assets and all the rest. But again, people will be worried about the capital and whether the shareholders will be willing to pump in those capital compared to those multinationals when you go playing in this space that the multinationals have capital to spray around. If
shareholders get value for their investments, why not? They just want to be sure that you are trending in the right direction. They want to be sure that you're taking decisions that are in their best interest. And so with the performance that we have posted, if you continue to post this and you ask shareholders to put in money, why not? They see the bank is moving towards the right direction.
Over 3 billion Ghana cedis is it profit before tax? I stand to be corrected.
Yes, that's profit before tax.
What were the drivers? I mean, if I just look at the numbers and even the growth over 60%, what did the trick?
So people overemphasize on the profitability. And I say it's not just the profitability.
Revenue?
Quality assets? Is the overall franchise, is the health of the overall franchise. You look at the various indices and you see this is a functional business. Beyond just the revenue, you see a bank that has an NPL of 10%,
Quite
Today,
strong compared to the
today,
industry.
industry is around 18%. Today, the NPL has actually gone down to about 4%, probably the lowest in the industry. You see a bank that has grown their fee income by almost 60%. And that's what excites me. Because we anticipated that we're going to get into an environment where earnings were going to be very low on the loan book.
Yeah.
And so we needed to diversify our income stream. So the fee income grew to almost 60%. You're talking about a bank that has a very strong asset quality base. We have grown our asset by almost 60, loans by almost 60%, with NPLs coming down from 15% to 10%. You cannot do this simultaneously. For us to get this just demonstrates that our teams understand what they are doing, they understand why they have to do it, and they understand how we want to do it. And so for me, it's not just about the profitability. Yes, we are the first bank to cross the 3 billion mark in PBT. We're the first.
Others have not released their numbers yet.
All banks have released now.
Oh, okay.
All banks have released now. We're the first bank to generate operating income of 6 billion. That's a lot. It's something to be proud about. But from where we sit, we need to look at the health of the entire franchise. It appears that we are ticking the box. It appears that the strategy that we agreed to execute is working, and it's working very, very well. We just have to continue in being in that execution mode.
Van, what do you tell those who would argue and say that the state support could be playing or could have played a very strong role if a George Wiafe Bank also has all these deposits that are linked to government institutions, all these other franchise and business linked to the state? Maybe they could be posting about maybe 10 billion in revenue or profit. So some are saying that it is hinged on not a level playing field, and that's where you are posting these strong numbers.
So, and I don't know where people are getting this from. We don't have so much government deposits sitting with us. We have branches across the entire country. No bank has that. And what that does automatically for you is it attracts mobilization deposits for you. And deposits are the engine of every bank. Once you have the deposit, you can create good assets with them. So our deposit growth is coming from our extensive branch network that we have. We've been in this country since 1953. And if you observe GCB, we are moving around the fabric of the Ghana's economic growth. So I honestly don't see where that is coming from. We don't have a lot of.
And you're getting government lines, deposits, government business, finances flowing through your bank that some are saying that deal with just GCB. And so there are a lot of deposits coming in.
I don't think
a lot of lines coming in that are linked to government.
No, we don't have government telling people to deal with GCB. We have a bank that has developed solutions that people are comfortable with. We have a bank that has a brand that people are proud about. We have a bank that understands the customer's pain point. We have a bank that is advancing the cause of Ghana's economy. We have a bank that does not just think about profit, but we're thinking about the financial inclusion of everyone. And so all these factors have positioned us as a bank of trust for customers. So we've got more retail deposits than we've got in the commercial and wholesale banking space.
Yeah.
So clearly, you don't seem to get advantage that people think we are getting. Our performance is down to a disciplined, focused execution of our strategy.
Do you think that it's a worry that sometimes people think that GCB is at this place because the field has never been leveled for all the players? Is that a worry for you when you have to deal with that perception?
Not a worry. So the bank has always been what it has been. Correct? So if there's that perception that they've always benefited from government, it didn't start yesterday, it didn't start 2 days ago. Why haven't we ever made the profits that we're making today? It is clear that the staff have seen the need for them to be the best. They understand where this bank is going, and they have owned it themselves that they want to be the best in the industry.
When I come back, I'll look at the bit about sustenance and also digging deep into the non-performing loans. What has been the GCB strategy in an industry where Bank of Ghana, he's very worried about the high NPLs. This is PM Express Business Edition, engaging the Managing Director of GCB Bank, as in the bank's financials, the bank's turnaround in the midst of the post-domestic direction program and its impact on the general economy. Be right back after. Welcome back to PM Express Business Edition as we focus on the banks. You've seen that a lot of the banks are releasing their financials, but the numbers looks quite interesting. And does it mean that they are out of the woods when it comes to the impact of the domestic direction program? And also looking at one of the strongest indigenous banks in this country and their impact or its impact on the larger economy. Engaging the Managing Director of GCB Bank, Farihan Alhassan. Thank you so much, sir. I was asking about the bit about the non-performing loans. What was the GCB strategy? Because it's an industry where a lot of the banks are struggling. Your regulator is worried. It has an impact on interest rates, credit extension, and even the survival of the banks themselves. How did you get around this challenge?
So we have improved our underwriting standards. We have decoupled credit risks from all other risks, and we're focusing so much on credit risks. So that for me is number one. We're careful about the kinds of transactions we get involved in. If we don't understand the industry, we don't play in that industry. We have a very strong retail business that is churning out really good amounts of loans. They are supporting the real economy. And I think the most important thing is, from my end, is just the fact that we believe that GCB is not just any other bank. We have to be seen to play in the real sector of Ghana's economy. And so we're just following the economic trajectory of this country.
In going about this, there are some who have said that, can we also blame the commercial banks? Because what has gone to the quality of loans, the assessment when the escrow meet, the credit committee, there's so much pressure on these officers to meet their targets. And some people have accused the commercial banks about what has gone into the quality of loans and the extent. And these high NPLs, you cannot blame the business sector, you cannot blame it on the economy, blame it on the commercial banks.
To a very large extent, I don't agree. I don't agree. If you look at our track record as an industry, and NPLs are lagging indicators. NPLs, as a result, is something that would have happened 2-3 years ago. So what you see today is a function of what happened 4-5 years ago around the DDEP, where interest rates shot as high as 42%. If you are in a very high interest rate environment, clearly, I'll just think about how many customers can take loans at 42% and pay at the right time. So the NPLs today see in the industry, for me, is a fallout of what happened a few years ago. With the recovery that we are seeing today, the expectation is that NPLs are going to come down. But customers who were taking loans at 42% are now taking loans at 11-12%. So, on the contrary, my belief is that what we see in the industry as a systemic NPL issue is a function of what happened a couple of years ago. I don't think banks will be that reckless to just take reckless credit decision, knowing very well it's going to come back at them in a few years to come. The underwriting standards in most of the banks are quite robust. They go through rigid credit assessment. But if the economy is not good, it is not good. And that's actually where we found ourselves a few years ago.
Mr. Farihan, someone was saying that the problem with NPLs has been a long-age industry problem. And the declaration program might have contributed. But some are saying it's a practice that has been there for quite a long time. That's why some will see that holding the economic environment constant, holding a businessman who came for a loan from GCB that I'm going to invest in a factory. The next thing is that he's buying the latest Benz in town and doing all sorts of things and going against the tenets of that loan. Some are saying that if the banks were a little bit extra careful, post-loan extension support, especially for the small size, medium enterprises and all the rest, maybe we could have a little bit of drop in the total industry.
You're right. I fully agree, which is what I said. We had raised our underwriting standards as a bank. We have early warning meetings that we are able to identify which loans we think will be problematic in the long term. If we have to restructure, we restructure. We play in the areas that we understand. If you don't understand your sector, there's absolutely no way we're going to play in that sector. We have standards that would go through as a credit committee to be sure that this loan takes that box. And I'm sure many banks are beginning to do it. But I think all I'm saying is that.
And do you think that with the improvement that we're seeing, it is going to impact on the recovery that you're looking for in terms of a more reduced non-performing, or people that these loans will now be performing going forward with respect to the environment now?
So a low interest rate regime also comes with its own problems. Coupled with the directives of the central bank is invariably forcing banks to lend to a real sector. So if you're not careful, you're going to have a subprime loans being.
Yeah.
So there needs to be that balance. But I think what would address that again is the fact that the central bank has actually cautioned that banks whose NPLs go above a certain NPL, there are repercussions for them. So all those things will help banks stay within a certain appetite in terms of how much loans they can give out to the real sector, and they will pay attention to the quality of loans that they are giving out. So you don't just create assets today and then you come back to raise provision on those same assets tomorrow. But beyond that is the fact that banks will now not put their assets or their deposits in government instruments because the earnings there are very, very low. So good businesses would have a field day to operate. They would have access to credits that they probably never had in the past, and they would have the ability to actually pay back these loans because the interest rates are quite low.
Mr. Farihan, I'll come to the loan book growth and the exposure and the areas, but I still want to come back to the non-performing loans. And Bank of Ghana has tried to move very fast to try and regulate that area. I mean, in terms of reporting and certain sanctions and all those things. There's the fear that from the regulator's perspective, that could make you so much cautious now that lending could be a major challenge. I look at some of the rules and I was like, can the commercial banks, can GCB survive?
So it's the balance. I think those laws are necessary. They force you to be a bit more prudent in the kinds of loans you create. They force you to think cleverly around what you want to do to generate earnings for the institution. So there's that careful balance around how do I grow my book responsibly and how do I ensure, even with that growth, I don't create a problem that could become systemic in the industry. So for me, it's that careful balance that you need to look at. For us as a bank, I think we're well prepared for it. We have a team that understands the economy very well. We have a team that has prepared for this for the past 12 months, and I'm very confident that we would take advantage of the opportunity that would come with this low interest rate environment to grow our book and grow them responsibly.
Farihan, do I get the assurance from you that despite these regulations, lending, not to the corporates, lending to the SMEs wouldn't be a challenge? Because that's where sometimes we see that's where the bigger challenge is. The assurance I get from you is that despite all these regulations in terms of reporting on the NPLs, writing them off and all those things, credit extension to these SMEs would not be a challenge.
So we're not just giving credit to customers, we're changing people's lives. So people need us to change their lives and they have a genuine story to tell. We are not just any bank. We are Ghana's indigenous bank. We are Ghana's #1 bank. We have to support those customers. We can't run away from supporting customers because we think that they are risky. It's our job as a bank to see how we can work with these customers to address some of the risks that we see in their businesses. And so whilst others see them as customers, we see them as partners. We are partners on the journey to growing these businesses. And we have to take that risk on them. So we'd work to present them as credible entities who can access the facilities that we have. So we're not going to run away from them because we don't want to create bad loans. If the business is bad, we'd work to make them good so they can access the credit. If they can access it today, they probably could access them tomorrow. But you just can't run away from them because it's a bad business. Who then would support those kinds of business? And don't forget that our measure as a bank is not in how much money we make, it's in how much lives we touch. It's in how much businesses we grow. And so I've been telling the teams we need to begin to think about what level of impact are we making in clients' business growth. So today, if a business made a profit of 200 million Ghana cedis, the question we should ask ourselves, how did our support enable that business to meet the 200 million Ghana cedis? If a business employs 20 people, our concern should be how then do we support this business to employ 40 people? So our job as GCB is not just to give out loans. It's to see how we grow our customers to become bigger and for them to realize their dreams in the broader financial context.
Mr. Alhassan, but some would say that you're not for the Christmas. These are shareholders' funds. At the end of the day, you go back to them to justify for fresh capital and all the rest. And that's where the challenge is about the quality of these loans and how do you allot them or extend them or grow them to make some good returns. I appreciate your good heart. I appreciate your concern for the larger economy, but these shareholders are looking for some good returns.
When the businesses grow, so you're not for the Christmas. Is the good book says, seek ye the kingdom of God, and all other things shall follow. So what you need to seek first is to seek the growth of the business. Once the business grows, they grow with you. So if today the business had a turnover of 2 million Ghana cedis, and through your support, they begin to have 10 million Ghana cedis, they are growing with you. They are growing with you. You are not just throwing away money recklessly. All you are doing is to say, I'm Ghana's biggest bank. If I don't support these businesses, no one else will support them. So how do I work with them in a way that allows us to support them for them to be able to pay and pay back without any difficulty? We've driven this race downwards. As a bank, I think that we've played a key role in bringing down interest rates because we saw an opportunity, went out there, we reduced our rates, we attracted customers, and that forced many other banks to reduce their rates accordingly. And that's the role that a big bank like us would play in this economy. We're not going to throw money away, but to the point I made earlier on, if you don't support that business woman in Makola, if you don't support that contractor, if you don't support that farmer, who else will support them?
What is your average lending rate as we speak right now?
So averagely, we lend at about 14-15%.
Are these the blue chip companies or that Makola woman that are Germans are from Mantima KB could still walk into GCB Bank and get access to loan at an average 14%?
Exactly. This is to your Makola woman, to your woman in Swami, to your woman in Asafu Market. This is to your employee working with Ghana Armed Forces, working with Ghana, and the nurse, the teacher. These are your real Ghanaian businessmen, Ghanaian employees.
What has forced you to go this way? I mean, averaging interest rate at 14%, that is interesting, looking at, again, the current environment. Why GCB want to go this way? Some are saying that let it be gradual.
So your GRR today is at 10%.
Yeah.
So you just add in a margin of 4. And in all intent and purposes, lower rates lead to people being able to pay their loans. You price higher because you think some people will not pay, and so you take cognizance of those losses that you're going to make. If you're in a low interest rate regime where you think customers will pay, why charge them a premium for their inability to pay?
So I was coming back to the Ghana reference rate. I mean, it was 11.7. It has just come down to 10%. When are banks like GCB going to respond to this in terms of the pricing of fresh loans?
We have responded. We have responded.
So what is your lending rate as we speak right now that this reference rate
is between 14 and 15%. And the beauty about it is you get it in real time. If you go onto our app today, you can have a salary advance under 26 seconds.
What is influencing this, your drive in the loan extension? I mean, have a lot of cash you're sitting on or capital that you're sitting on?
We're a well-diversified bank. Like I told you earlier on, our franchise is healthy. We've got good capital. We're very liquid. Our NPL ratios are very, very low. We are ready for business. We are open for business. The biggest challenge businesses have in this country is access to capital. And that's what we are extending to them. We are positioning ourselves as the bank that truly cares for the Ghanaian businessman. If that bank from another country would not support the Ghanaian business person, we have to support the Ghanaian business person. And so you would see us play in areas that people say are a bit dangerous, not because we don't realize the danger in those areas, but we have built skills in those areas to be able to support these business people. Banks are run away from agriculture. We are building expertise in that area so we can understand the farmer and the need of that particular farmer. Banks are running away from SME. We have segmented ourselves in a way that allows one business segment to focus solely on the SME client. I guess what I'm telling you is you need to understand the sector very well before you can even learn in that sector. And that's actually what we are doing as an institution. And the numbers for now validates that we are doing the right things.
Are the returns good?
So you may not get the returns on the loans. We are positioning ourselves as a transactional-led business. So what these seeming low interest rates do for you is that it attracts volumes to you. It attracts other kinds of businesses to you. Customers will now transact with you because they see you as the bank that gives them lower rates. In those transactions, you make fees. In those transactions, you do trade with them. In those transactions, you are able to find other solutions or other pain points for the clients that you can address. And you are in a world where he who addresses the customer's pain points gets the customer's money.
In terms of the exposure, I mean, the loan book going forward to this year and even next year, what will be the exposure to the informal SME, the real business people, or you're going to be heavy on the corporates and then the multinationals?
Look, about 90% of Ghana's business are all SMEs. So we would have to find a clever way of understanding what their needs are and solutioning for them. So we're not going out just selling loans as a bank. What we're doing is to bank the full entity and address all their pain points. If their pain points are capital, we'd make capital available to them. If their pain points are trade, we have trade experts in the bank who would help them structure very innovative products to support their businesses. So we are not leading with assets. That's not our strategy. Our strategy is to bank the entire value chain of a customer, understand what their pain points are, and address those pain points. If the pain point is that the person doesn't have access to capital, we're available to ensure that we give the capital in a responsible way that allows them to grow their business and allows them to pay back the money to the bank. Like you said earlier on, the money is for the shareholder. The money is not, we're not for the Christmases. So any loans that we give, we have to make sure the person pays. We just need to make sure that we are on this journey with these customers, understand where they are going, and ensure that we support them along the line.
What is the turnaround time for getting these loans? I mean, I knew some time ago you were doing 24 hours in terms of the loan assessment. Is this still there?
Yeah, in the retail space, you should be getting your loan within 48 hours, But if you went onto our app to do a salary advance, under 30 seconds, you would get your loan. 30 seconds, not 30 minutes. By next week, Monday, you can actually go and have an end-to-end process in assessing your loan. The loan will be done for you under 26 minutes.
How has the economic environment also impacted on this positioning and the growth in the loan book? You have inflation down to 3.2%. GRI is coming down. Government fiscal position is quite improved. Bank of Ghana is in a very solid situation and also to assist the commercial banks as well. Have all these indicators also impacted or is impacted on this appetite to lend as a bank?
It's probably what is influencing this. If you were in a higher interest rate regime, there's no way we'd have this same posture. because the probability of customers taking the loans and paying, like I said earlier, will be quite low. In an environment where you are giving loans at 38, 39, 40%, you're obviously stressing the customer, and the probability of the customer paying in those environments is quite low. In the current environment where risks are hovering around 14, 15%, it makes sense to expand your risk appetite, but you must do that and do that responsibly. You must understand who you are giving the money to. You must understand the industry they play in. You must understand what you're going to use the money for. And you must have expertise within the organization to understand this before you can even advance these facilities to them, which is why I told you we've built capacity in our team along the various sectors of the Ghanaian economy that we are banking. We are just banking the economy. We are banking the full value chain. If you look at Ghana's economy today, you have mining, you have oil and gas, you've got manufacturing actually advancing or influencing the GDP growth. And so these are areas that we have built capacity in, and we are supporting customers in these sectors.
Mr. Farihan, do I get from you that GCB has now opened the door to some kind of an aggressive lending, but these are, as long as the project is good, expect us to be there to finance. As long as the project makes prudent return, we'll be there to finance it. Do I get this perception from GCB Bank that after that strong performance last year, going into this year, we are going to be in your face, we are going to be in your homes to finance those good projects, and those are there, an aggressive lending?
So you get a sense that GCB is there for you as a customer, not just to give you loans, but to support your businesses and yourselves. Like I said, we are changing lives, we are touching lives, we are getting people to dream bigger, we are getting people to realize their dreams, and that's who we are. It's not just about loans, it's about the full bouquet of products that we bring to you as our customer and our potential customers. If you have a need that you think the bank, any bank can support you with, our doors are open, not just on loans, but on all other products. So we are not leading with loans, is all I'm trying to say. We are transactional-led business. If in the process there's a need for us to give you a loan, why not? If there's a need for us to give you equity or to advise you and get some equity partners into your business, why not? We've got an investment banking unit who would give you advisory services, who would help you with access to equity, who would help you with mergers and acquisitions. We are a full commercial bank with skills to assist any business in this country.
How has the low interest on treasury bills, and even the bond is now yet to be opened, acted as a real pressure on banks like yours to be innovative in growing the loan book? Some think that, GCB is doing all these things because, listen, if you look at treasury bill rate return right now, they are nothing to write home about. If you look at the bond is yet to be opened. And so, obviously, sitting on this cash or these funds, you have to be innovative to go out there with these.
So, George, you had me earlier when I said that the beauty of our performance, from my perspective, is the growth in our fee income. So we saw this coming, and we position ourselves as the bank that would not just rely on your typical interest income, but you should be a bank that customers see you as a trusted financial partner. And I think that is the journey that we are on as a bank, where customers see GCB not just as any other bank, but as that trusted financial partner that they can walk in to and have their needs addressed for them. So ours is to just solve the customer's pain point. Ours is to solve the customer's problem. And like I said, once you solve the customer's problem, the customer's cash belongs to you. I am in places where no other bank is. So the customer thinks about that area. The bank they think about is GCB. When they come to you and you solve their problem, they have no reason to take their money to any other bank. And their problems are varied. It could be that they need to send money to China, so they need Forex.
Do you think that the industry would struggle, or some will say that we are going to see the real banking separating the men from the boys now that the treasury bills is not the way to go? There are some who are afraid that...
George, you're right. It's a cycle, and it's an economic cycle. I think banks have gone through this before. The race may not have gone have dropped lower than they have dropped now. But we've seen this before, where banks were actually chasing customers with loans. Customers didn't want the loans, but banks were chasing them with those loans. So we're going to see that happening a lot this year, in my view. But like I said, I think the true test of every bank would be how you support your clients, not just in giving them facilities, but in ensuring that you address their pain points along their value chain. Yep. Is it salary payments they have issues with? Is it FX they have issues with? You must be with them. If your job is just to give out loans to your customers, then I'm afraid you're not doing real banking. You're probably just doing something different.
The regulator wants banks like you to lend and lend and lend, and the economy has improved. There are some who also have the school of thought that the banks are being put under some undue pressure. A bank will lend based on its own assessment. How do you respond to some of these concerns out there?
But the regulator has not put a gun to your head to tell you to lend to George.
In the NPC meetings, in the commentary from the governor of the Bank of Ghana, you hear the governor admonishing, advising, encouraging banks, moral suasion. The economy has responded. Go out there and lend to the real sector.
Perhaps what the policymakers, both in the physical and monetary space, have done is to work together to reduce lending rates. And so you have a choice to probably put your money in government instruments or to lend to the real sector of the Ghanaian economy. And like I said, there's no any better time to actually give out loans than now, because rates are low and the probability of customers paying is much higher. The business environment the economic environment that we see today actually calls for customers to expand their businesses. Rates are low. There's opportunity for you to get a lot more forex than before. You want to move into manufacturing. Amounts that you couldn't access in the past are now available. So there's real opportunity for banks to support businesses aspire bigger.
Mr. Farihan has always said that getting to the top could be easy, but sustaining it would be a challenge. When we get back from this commercial, I'm asking from you how or what is being done to sustain some of these strong numbers, the outlook, and even the broader economy. What role is GCB playing? This is PM Express Business Edition, engaging the Managing Director of GCB Bank as we look at the bank's recovery from the domestic direction program and how they're going to sustain some of these strong numbers. This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition as we engage one of the strongest banks in the industry, and how are they doing right now when it comes to the domestic direction program, and are they indeed out of the woods? Farihan Alhassan is the Managing Director of GCB Bank. I mean, I just want to get this clarity again from you. Can I say that the banks, including GCB, and as somebody who might not understand these numbers, and if I just look at the bottom line, you are out of the woods post-domestic direction program?
I'll tell you that our bank is in a better space today. We are stronger than we were before. Our capital is above the regulatory threshold. Our NPLs are lower. We've got a good asset book. Quality of asset is excellent. Our customers trust us. They are giving us deposits. 2025 has validated that we are doing the right things. Are there rules for improvement? Yes. Do I see us going back to another DDEP? Perhaps no. Are we out of the woods yet? Not fully. But is GCB well positioned to support our customers? Absolutely, yes.
Has these lessons helped you to build the shock absorbers to minimize any impact on the bank going forward?
Not just minimize, but it's also afford the opportunity to begin to diversify your revenue streams. And one of the things that we're doing in GCB today, like I said earlier on, is to just move away from the concentration on your interest income, to seeing how you could actually support your customers to make monies in other areas and not just on loans. So whilst you see us growing aggressively on our assets, the beauty for me is the sheer amount of money we are making on our fees and commissions.
How have you tested some of these new areas that the bank is exploring in terms of the mining? Because again, I appreciate the focus of trying to ensure that, we care about our clients, but some are saying that we've had some banks go into those areas and their fingers were bent. And so why don't you stay in your comfort zone, make the good returns, grow the loan book, have a strong revenue, strong profits, and deliver the results to your shareholders?
George, so you're a partner, you're not just a bank. We are not just a bank. We are partners to our customers. It would be unacceptable that a farmer works at GCB Bank and the bank says that because farming is risky, you can't support them. I think what the bank needs to do first and foremost is to understand the sectors that you want to play within. Once that understanding is there, you can appreciate the risks that those sectors come with and then put in mitigants to address those risks. My CRO says that the job of banking is a risk-taking exercise. You have to take the risk. If you don't, who else would? And like I keep saying, GCB is not just any other bank. This is the bank that is woven in Ghana's economic history since 1953. And so people look up to you to do things that other banks will not do. But you must just do those things and do them responsibly. Mining drives Ghana's economy. You can't play in that mining space if you don't have expertise in there. So we've built expertise in there, and that then allows us to play in that space. Oil and gas is critical to the sustenance of our economy. If you don't play in there, who would play in there? So we have a dual responsibility. One to our customers and one to this nation. And we need to make sure we play both and play them responsibly. I want to be the bank that people will look up to and say, I was an SME, through GCB I've become a global multinational. I want to be a bank that customers will look at and say, but for GCB, I would not have been able to build another branch in Lagos or in Abidjan in Cote d'Ivoire. So that's the bank I want to be. People must see us as that trusted financial partners. And it's so important for me that when I engage my staff on this, I get sometimes very emotional. That you can't just be another bank. You are GCB, you are Ghana's #1 bank. You are Ghana's iconic indigenous bank. And you must position yourself to be that bank that customers will trust that when they walk into your branches, they walk into your premises, they will not leave unless you solve their problems for them.
Mr. Farihan, you talked about a strong bank being in Ivory Coast, Nigeria. Some are saying that GCB has played in this comfort zone too much. When are we going to see GCB in the West African region? Even office representation. There were some banks who tried it, they've been there. Some are saying that with all these years, you stayed in your comfort zone. The expansion has kept too long. When are we going to see GCB moving to the West African
so
market?
We have never really,
to African market.
We have never really conquered
and all the rest.
We have never really conquered Ghana as we want to conquer.
With all these years in
we have to
with all these assets.
We have to be a local champion by far, which then allows you to move out to other markets. It's part of our strategic consideration to explore opportunities in other markets. But I still do maintain that we'd have to make sure that we become a dominant force in this country by far. Then that allows you to move into other markets. 2025 has proven that we are on course, we are on the right journey. The direction is very clear. Once we sustain this performance, you build shareholder confidence, then you can then begin to think about exploring other markets. But it's part of our conversation to see are there potential markets that we want to play within. There's no reason why other countries have banks in Ghana and we cannot have offices in some other places. By the way, we used to have a branch in Lomé, in Togo, these are exciting conversations that we need to have.
Not even a rep office in any other West African country.
We are having those conversations.
The governor of the Bank of Ghana, during the recent Monetary Policy Committee meeting, was worried about the impact of development in the Middle East on the broader economy. And even for the Bank of Ghana itself, they were cautious about their reaction on the policy rate. As a bank as well, are you worried about this development, how it could affect your loan book, how it could affect some of your clients, and what are you doing to minimize this impact? Yeah, it's true, a lot of economies are out of gear. Oil and gas is an area that you'll be going. It's impacted some of the place in that area. Is that a concern for you?
It is. It's a general concern. I mean, if we're operating in a broader economy, and whatever affects the economy actually has direct impact on our customers, like I told you. So we are beginning to assess how we've done various simulations to see if oil prices reach a certain level,
200.
what will be the impact on our customers. We've done all those simulations and would continue to do all those simulations. That's the point I made to you earlier on, that we have systems that look out for warning signals to see how we can support customers and support them earlier. If in the process you need to do some adjustments in terms of restructuring, you would have to explore all those options. So yes, we are very concerned about what's happening in the external environment, because it has a direct impact on what happens in the local economy. And what happens in the local economy has an impact on our customers, which would invariably have an impact on the bank.
Do you worried about the loans and it being serviced on time for businesses who have been exposed to some of these challenges? Their goods are locked up, they can't move goods around as well.
We are worried, except that the supply chain has not really been impacted yet. If it does get impacted, obviously these are things that could impact our facilities. But of course, with the way we are structured today, it allows you to begin to see ahead of time. And once you're able to see ahead of time, it then brings you together to see how can we then support this customer in these difficult times. Like I said, we are partners, our customers. We just don't support you when times are good. When times are bad, we need to work with you to get you out of the woods.
As one of the biggest banks in the industry, what role is GCB also going to play in the larger economy in terms of the policy direction, supporting the growth of some critical sectors of the economy? Is it something that GCB is doing in that area that you want to share with us?
We do a lot. We do, like I said, our overarching ambition as a bank is to support our customers in both good and bad times. Times are good, we are with you. Times are bad, we are with you. We just don't want to be that partner who only comes to you when times are very good. Customers remember you when you stand with them in very difficult times. So we continue to be who we are. We continue to be partners to our customers and not just be just that bank with them. We want to position ourselves as that bank that when they think about doing anything banking, the first bank they think about is GCB Bank.
How are you going to sustain these numbers? You have raised the bar. How are you going to sustain these numbers?
To continue solving the pain points for the customer. That's the most important thing. Just solve their pain points. They'll trust you. Solve their pain points. They'll bring you their deposits. And when they bring those deposits, you can create quality assets with those deposits. So we are focused on just the customer. And that's actually what we've done with our strategy. We have repurposed and reorganized this business into 3 business units. So we are, if you like, segment-led organization. And because you're a segment-led organization, it allows you to address the peculiar pain points in each segment of the Ghanaian economy. The SMEs have a different peculiar problem. That segment solves for them. The local corporates have a peculiar problem. That segment solves for them. The wholesale banking, which are big corporates, have a peculiar problem. That segment solves for them. Once you solve for them, you become commercial sharper. Once you become commercial sharper, the customers run to you because you be agile, you be nimble, you address their pain points in time. And when they run to you, that's how you make money.
Going through your financials, I saw how capitalized you are. I mean, do I get from you that as part of your growth strategy as well, do you want to stick to a regulatory direction, or as and when it matters, you would extend or grow that stated capital as a bank?
Look, George, my primary objective as a CEO is to maximize shareholders' value. If there's any opportunity that presents itself that we think will maximize their value, we'll take advantage of those opportunities.
To have strong growth in that.
Anything that will give them value would play in it.
As part of your growth strategy, I mean, you're quite strong on assets. Do you still want to pursue the organic growth? Or maybe if something presents itself, you will look at it?
Exactly what I'm saying. If it presents itself and is the right thing to do, we are pushing this bank to be relevant not just today, but to be relevant in the future. We are pushing this bank as a bank that we came to meet and would leave it better than we came to meet it. So if there was any opportunity today that would maximize shareholders' value, I'm sure the board will look at it and ask you to go into it.
As you try and wrap up on this discussion, in terms of the outlook for the bank, what would be the strong focus area going forward as a commercial bank, sustaining these numbers, exploring new areas? What should we be looking out for? Shareholders, clients, partners, potential clients, in terms of the outlook for the bank?
Look, you should be looking out for a bank that is ready for business, looking out for a bank that would be I'm just trying to choose my words carefully, would be excited, obsessed about the customer. You should be looking out for a bank that sees the customer as a partner. When you do that, customers trust you. When customers trust you, they bring you their money. When they bring you their money, you make more money for your shareholders. So everything we're doing as a bank is around that customer obsession. You want to be intimate with the customer. And once you are intimate with them, you understand everything about them and you solve for them. So if I was to wrap up this interview, it is GCB is positioning itself as that bank that is so obsessed about the customer, that we want to get intimate with them to the extent that before they even say they need this, we would bring it to them. So we know what they need even before they open their mouth to say, GCB, this is what we want. And that is the bank that we are trying to create. When you do that, you become relevant in the customer's life, not just for today, but also for the future. So we are building a business that will stand the test of time. We are building a business that doesn't just give shareholders value in the short term, but also give them value in the long term.
When Mr. Farihan Alhassan's contract comes to an end or wants to move on or moves on, what do you think should be the impact that you want to leave in this bank, that in irremovable link or ink on this bank? What should people remember Farihan Alhassan for?
People always think about legacy as the financial outcome. I have a different view. I want to be remembered as that person who built capacity in the bank to play in areas that the bank never played in. I believe in people first. I believe everything you do revolves around people. So you want to build capacity within the people. So that tomorrow, if I'm not here, I am remembered as that managing director who built people's capacity, build their confidence to play in critical roles that we have never played in. And they're playing these roles and playing them very, very well. So for me, that would be the legacy that I want to leave behind. When you have well-prepared people, when you have very skilled people, your problems are solved. Most of the issues you spoke about around MPL is just because we probably did not understand those sectors very, very well. Once you build that capacity where people playing in the various segments understand the sectors they are playing in very, very well, their expertise, they are experts in those sectors, it addresses to a very large extent the MPL problem that you have. It builds their confidence. They can actually rub shoulders with anyone from any multinational. They can talk about anything that pertains to the sectors that they play in. And that's what I want to remember it for. It will ultimately translate into superior shareholder value, but I am more concerned about leaving that legacy as that MD who truly cared for his people.
Farihan, I mean, one of my colleagues, when I was coming, told me to ask you this question. I mean, I nearly forgot. Mobile money business. Yeah. Do you see it as a threat to the commercial banks?
We're partners. I mean, we need to partner them. They have played deeper into that payment space, and whilst you see it as a threat, there's still opportunities in those threats that we can work together for both of us to make money.
But also going forward, what do you see as a major challenge 10 years from now, 20 years from now, with the models that banks are running right now? Would they survive 20 years? Would GCB survive 50 years from now?
So, like I said, we are positioning ourselves not just to be relevant today, but to be relevant in the future. We have our fintech wing, which is G-Money.
Yeah.
We're working very closely with the fintech unit to make sure that we position ourselves in that space as well. We are beginning to see the G-Money business also punch quite well above their weight. E-Levy had an impact on their ability to grow. With the finance minister outlawing E-Levy, we are now able to actually get back to our old customers, and we're beginning to do some really good, exciting things in that space. I think that for me, the future holds for partnership. Yes, competition is good, but there are instances where you think if you partner, both of you would survive. The industry would change for good. It will not be the same industry. 10 years from now, I don't expect banking to be the same as it is today. And that's probably why we are doing a lot of the things we are doing now, to make sure that 10 years from now, we are still relevant to the Ghanaian economy, to its businesses, and to its people.
Mr. Farihan, I appreciate your time so much. I'll be coming back end 2026 numbers and see whether the growth is quite significant or indeed there had been indeed challenges. I really appreciate your time so much. And I'll be coming back Q1, Q2.
Thank you.
End year. The numbers are.
I believe we have the right people to execute on our 2028 strategy. I believe the bank is well positioned to take advantage of the seeming threats in the economy, in the industry, as we spoke about in terms of the lower interest rates. I believe that our people are wired up and excited about what they've achieved in 2025. They understand that the achievement for 2025 was not accidental. It was down to their willingness to intentionally execute on our strategy. If we continue on that trajectory, nothing is impossible. I see a lot more collaboration in the organization than I came to meet it. And I get that feedback that people are just wired up, people are excited about wanting to be the best. I didn't expect us to be number one in 2025, in all honesty. I set out ambitious goals, I set out ambitious targets. Someone, when I walked into the first ESCO, and I said we're going to do above 3 billion, they all thought, who is this crazy guy? But clearly, we are all beginning to see that there's a lot that we can do together. My closing remarks will just be to our customers. We are open for business. We are there for you, not just as your bank. We are there for you as your trusted financial partner. Walk into any of our branches if you have any issues. We have regrouped ourselves in a way that allows us to be a fully functional commercial bank.
This has been PM Express Business Edition, engaging the Managing Director of GCB Bank, Farihan Alhassan. Indeed, the debate will still go on in your homes about whether GCB Bank could be doing more than what you're doing right now, and also how do they sustain these strong numbers. My name is George Wiafe. This has been PM Express Business Edition. Have a great day.